All right, so let's just jump right into it. For years, the entire financial world has been buzzing about this one single event, the SpaceX IPO. It's been called the biggest, the most hyped up public offering in history. But just recently, that quiet buzz turned into an absolute roar, with rumors of a valuation so huge it could literally reshape the market as we know it.
And then, right as the story was hitting a fever pitch, the man at the very center of it all, Elon Musk, just drops his bombshell on his own platform, X, a blunt, no-holds-barred denial aimed right at one of the biggest financial news organizations on the planet. So what exactly was he calling bulls? This number, $2 trillion. That was the rumored valuation for the SpaceX IPO. I mean, to put that into perspective, that's more than the entire economy of a country like Canada or Brazil. It's a number so massive, it kind of breaks your brain. And according to Musk, it's just plain wrong. So right away, you've got this huge showdown. On one side, you have major financial reporting. On the other, a flat-out denial from the CEO himself. So where did this absolutely insane number, and others like it, even come from? Let's unpack all the speculation. First, let's just do a quick primer on the key term here, valuation. See, since SpaceX isn't a public company yet, you can't just look up its stock price. Its worth is basically an educated guess. It's figured out by what private investors have paid for a slice of the company behind closed doors, or what Wall Street thinks it'll be worth when it finally hits the stock market. And as we're about to see, those guesses are, well, they're all over the map. And this is where things get kind of wild. Just look at the sheer range of these numbers. You've got Bloomberg with that eye-popping $2 trillion figure. But just a few months before that, private sales were happening at a valuation closer to $800 billion. And then you have other analysts, like the Futurum Group, with a much more conservative number, just over $350 billion. I mean, this isn't a rounding error. We're talking about $1 trillion disagreement here. Which brings us to the most fundamental question of all. Why are we even talking about numbers this big in the first place? What's the engine that's driving these absolutely astronomical valuations, whether you believe the high end or the low end? And this chart right here is your answer. While those incredible rocket launches get all the media attention, the real financial powerhouse inside SpaceX is actually Starlink, its satellite internet division. In 2024, Starlink was already bringing in most of the company's revenue. Now, don't get me wrong, the launch business is absolutely crucial. It's how they get the satellites into orbit. But Starlink is the high-growth, recurring revenue machine that has investors so incredibly excited. So that leads to the next logical question, right? If the company is doing so well and growing so fast, why go public at all? Why would you want to take on all the intense scrutiny and the quarterly pressure from Wall Street? An IPO, an initial public offering, is a massive turning point for any company. It's the moment it goes from private to public, raising huge amounts of money by selling shares to, well, everyone. But it is a trade-off. You get all that cash, but it comes at a price. Opening up all your company secrets to the world and answering to shareholders every 3 months. For SpaceX, the goals are just as ambitious as everything else they do. An IPO could pull in as much as $75 billion in fresh capital. That's money that could fund some truly sci-fi projects, like a massive AI data center in orbit. It also provides a vital exit, a way for the longtime employees and early investors who bet on Musk years ago to finally cash in. And, of course, it would mean that everyday people like you and me could finally own a piece of the company. But it's that last part, the public finally getting access, that has ignited a total firestorm of controversy online. Because the way SpaceX might hit the market could have a very direct and maybe very negative impact on millions of ordinary investors. And this is the part where it gets personal. This is the why you should care moment. Forget the trillion-dollar headlines for a minute. The real question for so many of us is, could this high-flying IPO actually end up hurting your retirement savings? So here it is, the core fear, laid out plain and simple. Many of us, probably most of us, have our retirement money in passive index funds. The ones that automatically buy all the stocks in the S&P 500 or the NASDAQ 100. The concern is that these funds, our funds, could be forced to buy SpaceX shares right after the IPO at a super hyped peak price. In effect, our 401ks would be providing the exit liquidity for the early investors to sell their shares to us at a massive profit.
Here's how that nightmare scenario could play out. Step 1, SpaceX goes public at a massive, hyped-up valuation. Step 2, the stock exchange bends or changes its own rules to get SpaceX included in a major index almost immediately. Step 3, every single index fund that tracks that index is then forced to buy the stock to match its holdings. And step 4, knowing this giant wave of forced buying is coming, early insiders sell their shares, the price falls back to earth, and the index funds, and by extension you and me, are left holding the bag.
And here's the kicker. This isn't just some hypothetical fear. This is real. The Nasdaq has already changed its rules. Usually, a company has to wait around 90 days after its IPO to get into the big indexes. The new rule? It slashes that waiting period down to just 15 days, basically paving the way for this exact fast-track scenario to happen.
So what's the actual damage we're talking about? Well, doing some quick back-of-the-envelope math, some folks on Reddit figured out that if you had a $100,000 portfolio and SpaceX got into an index at a $1.5 trillion valuation and then dropped by 20%, your portfolio would lose about $400. Now, it's not catastrophic, but it's a tangible loss that comes from what a lot of people are calling a rigged game.
And that really gets to the heart of the matter. This quote from a Reddit user just captures the bigger anxiety perfectly. The problem isn't just about SpaceX, it's the precedent. If the rules can be bent for the biggest IPO in history, what's to stop the next big company, and the one after that, from using our passive investing system as their own personal cash-out machine at our expense?
Okay, so this story is obviously far from over. With so much speculation and so many moving parts, what are the key signposts we should all be watching for as this historic IPO gets closer to becoming a reality? Here's a quick checklist of what to look for. First, the S-1 filing. That's the big official document a company has to file before an IPO. Will it finally give us the real hard numbers on Starlink's subscribers and profitability? Second, governance. How's the company going to be structured to balance Musk's control with the rights of public shareholders? Third, competition. Keep an eye on moves from Amazon's rival Project Cooper. And finally, government contracts. We need to see just how much of SpaceX's business really relies on goodwill from NASA and the Department of Defense. So that's where we stand. SpaceX has undeniably rewritten the rules of space travel, making the impossible seem almost routine. The final trillion-dollar question that's left is whether its debut on the public market is about to do the exact same thing to the world of finance, forcing all of us to rethink the rules of the game.